All right. Good evening, good morning, good afternoon, wherever you are on this awesome, beautiful planet. Welcome to the Inner Circle Live Asian session. I'm your host for tonight's session, Benny Allen, along with my awesome partner, Mr. Ryan Carthage. And we're definitely happy and grateful for all of you being here with us this evening as we take a look at the technicals and the fundamentals to see what we can take advantage of in the Forex market. So, let's turn off any and all distractions. Let's make sure that we focus and concentrate tonight, everybody. Grab a pen and paper, take lots of notes, and let's make sure that we participate and engage. If you can hear me loud and clear, let's start things out. Drop me a big one in the chat. We could get started. What's going on, Joy? Mary, Brandy, David, Jerry, good evening. All right. So let's exit out of here. Got a lot of price action going on today, right? So let's go over to trading, Forex Factory. And let's take a look at what happened today, right? So we had CAD GDP come through, decent, okay, came in above forecast, so that's good for the CAD. So even though we got high inflation, all right, still make unemployment claims for the United States, right? That was a big one, okay? Came through at 193K. The forecast was 215K. So that's just more support for the Fed, right? Which has been their message all week. It's just more support for them to say, hey, we've got to keep hiking rates. We're not quite feeling the pain yet. So unemployment claims came in above forecast in a sense, right? They were projecting 215K, 193, right? So, and then we had Governor Orr speaking today, but that was about some here, the future of central banking. So nothing super impactful there. And that was pretty much it, right? We know that we've had some light days ahead as we close out the month. Again, tomorrow we've got that core PCE price index. So we'll see if that comes in above forecast. Okay, again, another data point for the Federal Reserve. But hey, the bottom line is the Federal Reserve is hawkish. And we've got the rest of these central banks speeding up their monetary policy, doing all sorts of things. The BOE buying long-term bonds, things like that, aged bonds. And we could see the price action and how it's affecting everything. We were looking for those pounds. They hit that low price. We were looking for them to correct, and that's exactly what we're getting, and there's opportunities in that, right? The euro making gains as well. So let me make sure that we've got everybody has control of their microphones and we can get things going. If we go over to trading economics, right? So hey, we got that relief rally, but at the end of the day, US stocks sink. Okay. So we're headed, right? We're headed towards, right, that recession. It's just a matter of whether it's going to be, short-lived, right, or long-term, right, which a lot of people are thinking it may be short-lived. All right, so we'll continue to watch that. Dow closed down 458 points, while the S&P and the NASDAQ tumbled 2.1% and 2.8% respectively, amid persistent worries about tightening financial conditions in the wake of slowing economic growth. All right, the tech sector among the top losers, which they usually lead the way. Okay, when it comes to this type of thing, led by a 4.9% slump in Apple, and Bank of America downgraded the tech stock to neutral. Okay, so tech sector is usually at the forefront. All right, so that shouldn't surprise us. So that's it, right? So we see the output growth in Japan moved up, but hey, we know what the issue is, right? Inflation. German inflation rate hits 10% in September. So as an investor, what are you thinking? Oh, that ECB is going to have to get more aggressive in hiking rates in order to combat it. Okay, 10% in Germany, biggest player in the Eurozone. All right, so we see Mexico, right? That's the central bank in Mexico, raised rates 75 basis points to 9.25%. So yeah, that's the story. That's the story. So central banks globally are starting to speed things up to fight inflation as we get towards the back end of 2022. So let's take a look at the US dollar. We can see on the daily, we've got that 80-20. Doesn't matter what it is, how it plays out. And we can see where we got that sell-off starting to stabilize a little bit. Okay, we'll click over and look at the 10-year bonds. It's starting to find some support. Okay, starting to find a little bit of support right there at that Tinkerson. So we'll see what happens. But the dollar, right, is moving down. We'll see if it gets another bounce up for a correction or not. But if you come here to say year one, you can see where it's made a pretty good correction. You can see that ABCD wave to the downside there on the dollar. Okay, so we expected at some point to see a correction. That's exactly what we're getting. Okay. Hold on one second, everybody. People who just joined us, let's make sure we get them set up. And we're all set there. So that's it, right? That's the dollar. We see it correcting to the downside. 1 hour stochastic in the buy zone. We are still, right, larger wave daily. We are still in the sell zone. So we've got the potential for a continued move to the downside. We will see how that works out, maybe back down to this daily level here. So we'll see how it goes closing out the week tomorrow and going into to next week. Any questions on anything going on fundamentally? No. Ryan, good evening.
My brother, good evening. How are you?
Doing great, man. I'm always in a super good mood when you got volatility in the market.
It's a beautiful thing, man.
Some things as slow as molasses that I start to get a little frustrated, even though I know that's part of the game. Right. So that's that emotional part that maybe I'll figure it out one day. I'm gonna need your help on that. But yeah.
I got you, brother.
So that's where we are. So I'm good when the market's moving. I'm all good. Right. So yeah. So let's take a look at everybody. Let's take a look at these well, first we'll go as we close out the weekend. We'll look at some of those setups that we were talking about last night, right? Bringing it down to the 15-minute, finding that low point or that low point of reversal, or finding that high point where price may reverse, and how to get down to that lower time frame and find that wave. So we can see here on the overall longer swing on this Aussie yen, right? Looking at this Aussie yen, you can see that it is making that correction off that 118, 127 zone. Okay, we even broke and then pulled back to retest that 93.05, and we're moving, right? So we look like we could be headed to that 382, which is the target we'd like to find. Okay, you come down here to the 1 hour, similar type of price action. All right, this could come out because that was the last move there. That's the 382 target on the one, somewhere around there. But last night we spent a lot of time down here on these lower time frames and looking at these moves. And as you can see, right, almost just how we drew it up last night. Okay, got a decent pullback right at the tip of your buy zone, and then it's getting long from there. And there's that TP1 target. So it's making progress. So even on your 15-minute, it takes some time, but the sequence plays out nonetheless. So hopefully some of you were able to take advantage either on a correction to the downside, right? That's an 80-20. Doesn't matter the time frame. Okay, smaller moves. Yeah, as some of us are newer, we're trying to develop that patience. All right, so maybe you like the smaller moves playing a 15-minute. You can get the same type of setups and the same results. Okay, the market moves in waves. All right, can't say that enough. That is the foundation of what we do. So that's where we are. So here's if you just want to take it to a D extension, there's the 1.618 at the 94.48 level. And then just above that is that TP1. Okay, so if you take it, pretty much came down to retest, tried to retest that 93.05. So if you hit the respective D extension, that's a 137 pip move. All right, depending on where you got in. If you got in off the break, right, somewhere around there, then hey, if you get in off the break, you put your stop below the C. You don't want to put it below the A at that point, right? It throws your risk to reward ratio off. So still, right, close to 100 pips off that move. All right, so that's the Aussie yen. This one we covered last night. Any questions?
No, sir.
All right, moving on. Aussie dollar. Taking a look at that. Similar type scenarios, right? Look at that. Push deeper, didn't hit that D extension, and look at that ABCD waves, right? I know you can see that now. You can see that crown in that ABCD waves. You all are putting the time in on the chart, just showing up every single night, getting the visual reps. And then look, right? There's the break. There's the pullback. Okay, we were talking about those crown reversals last night, okay, on some of these setups and what could potentially happen. All right, so there you go. Bingo. All right, now you just let it play out, let it go. Work out your risk to reward, let it play out. Okay, so that's the Aussie dollar there. And again, right, we didn't get a 80-20 scenario here, but you can see how it turned over that B2C move, one of the sweet spots, B2C, 80-20 zone, back down. You got the reversal there, and then now it's pushing out of that zone, but it hit the buy zone and it reversed. Any questions on the Aussie dollar?
No, sir. That was a clean move.
Clean, super clean, right? I love it. I love it when the market is moving. Okay, so CAD, yen. All right, still trying to, right, still hovering at this 382 in the buy zone. So it's ranging on us a bit. All right, we come here, we can see how it's just sitting at this level. So what do we think? We think, all right, well, at some point, we got to break out. We got to break out. Price is going to have to make up his mind. This was tracking that trend line break and how we were moving down, the inner to outer trend line move that occurred. And as you zoom in on everything, you can see how tight that is right now. Okay, so we need a breakout there. We need a breakout there. See how it's just pushing sideways? But even there, look at that low and how it's trying to make that move. So price to break out. And if it's time for that CAD to get back long against that yen, even once this plays out, once you get right to where you're really in your buy zone on the opposite side of that trend line, that's the way it wants to break. Okay. Then you just wait for another fib to set up, right? Wait for that fib to set up and give you a pullback. Right. Then you look to get long on it, but we're pretty much ranging right now. I started the fib at that last low, and we'll see. We'll see what type of progress that it makes. But we just want to be patient, okay? All right. See if it breaks that way. If not, it's going to stay below trend line. It's going to take everything out and continue to move south. Okay, up, down, sideways. Only way the market really moves. Questions on the CAD yen?
No, sir.
All righty. All righty. So that was the CAD yen. Euro Aussie. This was the one, right? Had two different scenarios. One played out, our crown got blown up by that strong euro move. That's all right. So when we were initially looking at this, right, we said two scenarios, right? We get a break or a retest and a move down. Okay. And then Ryan did a great job of pointing out that we have a potential crown because we did, right? So that was to the downside and it didn't work out, right? So we looked for a break and a retest at some point, and maybe a continuation on that Euro Aussie, as we saw just, hey, global tightening going on, Euro, right, still pumping. When you get, right, fundamentally, German inflation pops through. Biggest player in the Eurozone, hits 10% in September. Uh-oh, let the speculation begin, right? Investors are going to start to price in another rate hike for the Euro, even more so than before. Everybody was already speculating, right, to a certain extent that, hey, they've got to keep hiking rates pretty much across the board globally. But then when you see 10% coming out of Germany, hey, let's start pricing that in, right? Possibly an even more aggressive rate hike than before. So that won out. All right, that won out. So Stop loss here, stop me out. Now I'm looking, okay, can I get a pullback and a continued move up, right? Another thing, right? We had the range drawn out. The reason that we brought this to our attention is because it struggled at this area a little bit. It rejected it and it pushed down. So from our higher time frame, we've already got the range drawn. It's just looking like it's trying to work back to the top of the range. We pop 153.62, then we're just going to continue to move up to what? That daily 382. Boom. So maybe we'll eventually break the range. We shall see. We got a ways to go. But that is the move. Okay. Double bottom type scenario. Got held up here for a little bit, pushed back down to a support level, and then it just continued. So we've got a continuation. So now we know. So we look for a correction and a continuation to the top of the range on the Euro Aussie. Any questions? I thought that was going to turn. I thought that was going to turn over.
I thought it was too, man.
Yep.
I was definitely sitting on it.
Yeah, I was sitting on that. I thought it was going to turn, but it didn't. It didn't give that aggressive move off that level.
Hey Benny, can you briefly go over? I'm sorry, Benny.
Yes, ma'am.
Can you briefly go over what you were saying about the hike that went up to 10%? I kind of missed what you were saying about it and what's the reference. You know what?
Yeah, German inflation hit 10% in September. Right? Consumer price inflation jumped to 10% year on year in September, the highest on record and well above market.
And you said that's what affected that move to go.
Yep. Because it was Euro has already had some bullish momentum, you know, going on, but when you look at it wise, it's not the strongest currency right out there. It's the weakest, right? So it wasn't too long ago where you saw it collapse like you saw the pound just do. But when you see reports, when you see central banks starting to make moves to really combat inflation, they've been making moves, these central banks. But when you start to get such monetary divergence against the US dollar, the US and the Feds is just like pedal to the metal. We're going to keep hiking this thing. We're super aggressive. Where everybody, all these other central banks, not all of them, but some of them, like the Eurozone, because of everything, they've got an energy crisis. They've got a war with Ukraine and Russia. They've got a lot of things going on. So even though they knew inflation was getting up to high levels, it's just like, we got a lot we have to manage through. But when you have the Federal Reserve leading the way and being super aggressive, and they're all out here marching to the same beat of the drum, right? Fed members saying, oh, we're going to keep hiking. We're going to have to feel some pain. We're committed to getting inflation back to 2%. So when that currency, right, you've seen the US dollar just go through the roof. So now that puts a lot of pressure on other central banks. Why? Because when you're dealing and you have to buy commodities and things like that, all that stuff is done in the US dollar. So if your currency is super weak and the US dollar is super strong, and the exchange rate, there's this huge divergence in exchange rates, that's a problem.
Gotcha. Yes.
Right? So it forces you as a central bank to have to do something. Right? So that's why you saw the Bank of England, they came through 50 basis points. Investors were just like, man, that's a dovish hike. That's not good enough. Inflation is ridiculous. You're going to have to do more. So you start to see, then they came through with a stimulus plan to cut taxes, right? Quantitative easing, pretty much. So then they came in and said, wow. So then the pound just tanked. So then they said, okay, well, we got to do something. We're not going to do an emergency rate hike, but what we're going to do is we're going to come in and start buying old aging bonds and things like that to kind of pump money into the market to try to keep our economy moving, right? So it doesn't come to a screeching halt. So now you see that the pound you got a correction going on with the pound, but that euro, right? They're already saying, hey, we're going to raise rates. But now when you see German inflation come through at 10%, everybody's starting to speculate like raising rates. But now with this type of data, right, we may see, so maybe they were rejecting 75 basis points. Now you might have investors, and this is for example, I have to look at it, do more research, but now you might have investors saying, man, they're gonna have to, the bets are on, right, for the probability of them to raise it by 100 basis points next meeting. So they start pricing that stuff in now.
Wow.
Right?
Okay.
The market is speculation, right? So that's what you see there. So when you see it had been moving, and then you start kind of pause a little bit the euro, and then it's just boom. It just continued to move, so it broke through. So then you just play things accordingly, right? You can see, look at the move. Look at this move. This is a 1 hour chart. Look how it had been moving. You see that, how that's moving? From your bottom left to your top right. Look how it just started moving sideways. You see it? Okay. And a lot of times when you get that sideways movement, that's when you start finding, patterns, harmonic patterns and things like that. But you can see how it started moving sideways. It's taking a breather. And then today, bang, it pushed right through resistance. Okay. So we always say you need a fundamental catalyst. And so it looks like we got it. So now that's going and it's continuing long. Okay. So you got the impulse move up. Then you've got the pause. Okay. People, you're here depending on where you learn, accumulation, and then boom. Okay. Pushing back out of there. So that's how that worked out. All righty.
Yeah, that was good. Thank you.
You're welcome. You're welcome. Okay. So that's all we're doing when we're looking at technical analysis, everybody. We're just looking at the footprints, right? All the buying and behaviors and the selling habits, of banks, institution, and real traders all around the world. That's what we're looking at. All right. So that's that. The Euro CAD. Well. We got to that 382 target.
Surprise.
It got the push that it needed. It got the push that it needed. So if you come down and we were saying, hey, let's look at how it's playing out, right? We get the break above the cloud. Okay. But the risk to reward on that was phenomenal. That deep correction. And then that push through. Okay. So if you look at it here on the 1, okay, we were working on it, right? That pullback, and you can see how it just completed the move. Okay. Just completed the move. Now we've got a new fib, a new AB boundary, right? That's how it goes. A, B, C, D, hit target, and now we've got a new AB boundary. So we look for a correction and a possible continuation. Okay. So mark that one down, right? New AB boundary on the EuroCAD. Okay. So we achieved a extension on the lower time frames, and then we hit the daily 382 right there. Okay. Patience pays. Patience pays. Any questions on the EuroCAD?
No, man. Honestly, on this one, I don't see anything that's gonna call for a complete reversal here. So I'm looking for nice pullbacks and be able to add to this one. I still got my original position in, so but I don't see anything fundamentally, especially with the German inflation. So
right.
Yeah.
Right. It's just a matter of how long investors are going to continue to pile in on the speculation, right? So we're on it. We're on it. Great job. Great job. This Euro Swissy. Take a look at this. All right. And so I wanted to point this out because look, AB boundary, that's the bad signal. You like trading on lower time frames? That's cool, right? No, possible reversal zone, possible reversal zone. A, B, C, D, that D, right? Because think about it. Okay, we cover this a lot. A, B, C, D. That represents potential exhaustion, which could lead to what? A correction at some point. B boundary, 118, 127 zone. So we know that our C becomes our new A, our D becomes our new B, game starts all over again. So these little moves right here on the lower time frame can pay huge dividends for you. Okay, so that's what it looks like on the one. But if you look, right, when we were playing with this last night, look at the break, right? Look at the push. Look, there's your pullback. Look at your break. So we're in the 118, 127 zone. The game starts all over again. Starts all over again. So you want to key in on that. Okay, don't have to trade all of them. Okay, but learn, right, how to find them consistently. Okay? Find the setups consistently. So that's the Euro Swissy. 80-20, right? We're looking for a correction. If you like those smaller plays, they're there all day. All day. They're there. So if we come in, even if we put in then run a 5-minute chart on this one. If we come out, okay, you can see it, right? Even more on the 5-minute. You're just zooming in. So if we run our fibs on the 5, find the low. Okay. Look, there you go. Just like that. Right? Just like that. We look for that correction. Are there times when you get this? Yeah, that's that shallow correction, right? We like to say that's that 20% of the time where we got a shallow move to the 236, we got that bounce. We didn't get that pause to that deeper correction. We got all types of numbers in China coming out right now, PMI manufacturing and everything. But here we are, 118, 127 zone, potential correction. Okay. So you decide how you want to play it. Do I want to play that move, the 80-20, or do I just want to let it come down and then look for evidence to get long? Any questions on the Euro Swissy?
No, sir.
All right. Appreciate it. Euro GBP. Okay. This one's sinking, right? The pound getting a little boost too. That one's sinking. And so we want to continue to watch that one. That's your 4-hour play there. It's getting deep in the zone. Look at that. That's your one. It's coming back to that trend line. Maybe we come back down to that 87.21. Not sure. Okay. But then if you come to your 15, right, we're just moving down. It's probably already taken out that level there. So yeah. So what you do, we just run that from the top. Let's see what we got. There you go. Now we wait to see. Pull that down like that. And I'll even pull that down, that trend line. So we can see where we are, like so. Okay. So look at that. Smaller wave, that's already been taken out. The AB, right? If you ran it, it's coming down. So now look, let it press and see what it's going to do. And now you're just playing a reversal the other way. All right. Or, right. I say or both. Just drop your trend line on there. Like that. See if you can get price to reverse. If not, we know the deal, right? It's going to come down. It's going to continue to press. And it's going to take our A out. It's going to take our A out. But let's just be patient and wait. Let's see. Okay. Questions on Euro GBP? It's been a nice ride. It's due for a correction. See if it stays within that AB boundary on the higher time frames. All right, good deal. Question? No. All right, all right. Look at that. Testing that. Euro JPY. Is this candlestick formation for real? We're going to find out. We got that boost, but we knew, look, remember us talking about that level? Man, it's holding. Okay. Said it had the potential. Maybe it'll hold. Maybe it'll hold. It is right now. We've got an official swing low and we're pushing up. So maybe we get range bound. We see continued strength in that euro. It's probably going to break through those highs and stay long. And stay long. We know, right? Yeah, we had the correction down, right? With the Japanese government intervening, but still, interest rates, monetary policy, huge divergence between the Bank of Japan and other major central banks. Okay, so we're pushing up stochastic in the buy zone. So we may have more upside potential. I did not get back in after this pullback, Reese. I hope you did. I didn't. I missed it, and it continued up to the 61.8 and TP2. I need to get back to split my orders up. I just let one ride, but that's a good one. Now on this 4, if it's going to continue to get long, then it's going to take this A out, right? And then we're just going to continue to ride up ABCD waves. Okay, that's how we're going to play the game. If we come down to the 15, look, new AB boundary, everybody. See how these cycle in and cycle out? It's amazing. You missed it too? Yeah, me too. I mean, but I guess I made some gains on it, so can't be greedy. That's another opportunity. But here we are, right? Inner to outer trend line break. Look how price is flowing. Okay. It's the euro's turn. It's the pound's turn now. Okay. We had the dollar ripping. Now we've got these other currencies ripping. Okay. So look at the pullback. Look at the continuation. Now look, we're right in that zone again. Okay. Same play. Okay. The reason why we show up here Tuesday, Wednesday, Thursday night is to really just try to give a good example of the consistency, right? You want to be a consistently profitable trader, right? You have to be consistent in your approach to the market each and every time. So it's the same play over and over and over again, right? We see this in our sleep now. That's where it is. So keep an eye on that one. Euro JPY. Any questions? So hubby didn't come through, huh? It's all good in time. Euro NZD. All right, look at that. This is just doing all types of stuff in the zone, but it's bullish, right? Of course, we're still in the down. AB boundary, euro got beat up. It's been getting beat up for most of the year, but now we've got this beautiful push long. Okay, so we're thinking what, 173.58 monthly resistance. It pushes right around that 61.8 again. You saw the reaction that it got last time. Okay, a little bit of a different story now, with the central banks becoming more aggressive. So we'll see what happens when we get back to this level. Maybe we retest this level that we just broke at 169.27 and a continuation up. We shall see. But we know that NZD is a commodity currency, right? So overall, medium term, if the sentiment continues to sour, right, global markets continue to tighten, I'm definitely going to take that euro over that New Zealand. So here's that monthly level, 173.41, right at that D extension. So it's a matter, does it want to correct and retest? Right? It's going to come back to this level and retest. We didn't quite get a 382. Maybe it'll get deeper, not sure. But the first test will come right here at this support level, right back at that 169.27, that weekly level that it broke. So we'll see if it'll come back there. Maybe it won't. Maybe it won't. Maybe it'll just continue through and keep its momentum to the upside. If it does that, we'll revisit things at that point. Okay. We know that this 173.41 is a monthly level, and then it represents on the daily a 61.8 zone where it reacted the last time. Okay. So just continue to be patient with that. It's made a nice run. Any questions on the Euro NZD? All right. Okay. So look, so think about it. If you set up your charts, okay, coming into the week and you prep, you can see now that we've run through some Aussies. We're about to come into the last Euro pair, and we're moving along quite nicely. And that's with me talking, right? That's with Ryan talking. That's with discussion in between. So if you're on your own, right, you can get through these charts because you know what you're looking for. You know if the pair is in your zone, right, or not. If your setup is there or not. If not, you keep it moving, right? Maybe you set your alerts up. Okay, you get your alert set up to alert you. So, like for example, we come out here, we look at this Euro USD, getting a reaction, that 96. Okay, that 96. Ryan said, "Hey man, if we break through this weekly level at 99, he called it a long time ago. We're gonna go down to 96. It's a monthly level." He said that's gonna be a key level, and you can see it's a key level because you got buyers perched there. They're reacting strong. So it's amazing once again how you get to these key levels, and then you get a 10% print coming out of Germany. Right? There's a reaction. So if we come down and you look, what do we have anyway on the 4? A new AB boundary. It's amazing. New AB boundary, monthly support at 96, 10% print for September for Germany. Bam. All right. Now we come down to the 15. Right? And we can see where things started to break loose. Right? You can draw your trend line. You get to those exhaustion points and you want to trade reversals, just draw your trend lines. Right? So we'll just take it from here like that. And we'll come straight through. And we'll take it there. See that? We know on a higher time frame, that's the AB boundary that formed. Now look at the reversal. Bang. Okay. Now look what we got. Okay. 118, 127 zone, 80-20. See if we can get price to correct. Okay. Back down to that 382, 93 pips, 61.8, 125 pips. If you say, hey, I want to stay long, I think that dollar's going to continue to correct. Euro's going to gain strength, speculation, investors continue to price in a more aggressive rate hike at the next meeting, then you might say, hey, I'm just going to let it pull back. And then when it comes down to me, I am going to look for evidence to get back long. Right? Maybe that's your trade plan. Okay. Let it give you evidence. Right? Let it break that trend line. Let it push up a bit. Then you get involved. Right? You're busy. Set an alarm. Put these levels in. Set an alarm. Okay. Set an alarm. Go in. Put an alarm on it. Just remember with Smart Trader, leave your computer open and running. Can't let it shut down, as it will not send you the notification to your email or to your cell phone. Okay. But that's that. So we can see another 80-20, another correction, strong impulse move. But look at that wave. Right? Look at that wave. So we've got an A6 pullback on that. You got an A6 pullback. So that gave us a potential upside to the 118 of 119 pips. And it got there in a hurry too. Got there in a hurry. This is your 5 minute. Same game. Same game. Smaller waves, more fibs. But look. Okay. Questions on the euro dollar?
Hey, Ben,
Mm-hmm.
on your 4, did you have that close to a 38.2?
On the 4?
Yes.
Yep, it's closing in.
Okay.
Mm-hmm.
Okay.
That's what
I got a line of sight. So I have a previous weekly support level at just in that area too. It looks like you might have a daily. Let's see.
That's what
98576.
98576. Let me put it in. You said 98576.
Yes, sir.
Right there. That had to be on the daily, right? Because here you didn't get a swing low. See that second candle broke it.
You're right.
So that's got to be
you're
at
right. I actually got the wrong color.
98.50.
Yep, I got the wrong
76. Okay. So on the daily.
Yeah, right there at
right
September 5th.
Yeah.
Yep.
Right there, that low.
Wrong color.
No, but you're right on that. I don't have it marked.
So that's kind of in line with that 382.
Yeah, that'll complete tomorrow. Yep.
Yeah. So that could be a key area for us to watch, that retest, and then because that was a zone that it broke through. So
yeah, for sure.
And in line with the 80-20 on the lower time frames.
Yeah.
Completion of a 1 hour fib. Yeah.
For sure.
That could be key for
Yeah, the 382 is in line with that under 1 hour.
On the 1?
Mm-hmm.
Yeah. Where's my 1?
That daily.
Oh. Yeah. Okay. Okay. Yeah, it's a 1 hour one too there. Way to spot that one. Yeah. Kim, repetition the mother of all skill. You're gonna get it. I know you're gonna get it because you keep showing up. You keep showing up. You keep showing up. We have all been exactly where you are. That's why community helps. For sure. I appreciate you sharing those thoughts. All right. But we want you to know that that's natural. That's natural. So yeah, so man, we got a nice look at that. It's decent. It's decent there. It's decent there. Okay. And hey, you like tight stops? Put your stop right above your high. Right? Either it's gonna come down from there, or it's gonna stop you out. Okay. But you gotta be willing to take the shot. That's 80 pips. What is that? 36. So almost 2 to 1, pretty much. So, take the shot. If it continues, it's going to let you know, right? If you're not right, it's going to let you know that you're not right. I try to keep it as simple as possible. So that's the Euro USD. I want to look at these pounds. Look at the move, right? Again, AB boundary. That's a rocket there. That's a tough one, right? But as you get to that D extension on your previous fib, right? So as you move to this D extension on your previous fib, you can kind of start keying in, right? So here, this blue line was that D extension that got hit. Shallow didn't get a lot off of that. Didn't get a lot. Took back 23% on this last fib. AB boundary, 23% up against a weekly level at 178.12, and then it just dropped off. That's okay. That's cool. But what I want to do, if I like playing reverses, especially on the lower time frames, I'm looking, okay, it just hit a D extension. I have to know that there's a potential reversal zone. Okay. So if you come down, right, here's your 1 hour. Boom, it's getting a boost. Right. From the action, Bank of England. Look at that. Just bang, hit a D extension. Smart trader hasn't even had a chance to react. But if you come down to the 15, here's the swing. Again, what do we see? Prices reached the 80-20. Okay. A lot of opportunities as we close out the month. It's always another trade just around the corner. Okay. Now this is a pound pair, so we know that's a big move. So if we correct, 349 pips. If we see the correction. Now you tie that in with, hey, yeah, they did what they did. The central bank took took action. That's what they're supposed to do. You can't just get railroaded. You can't have your currency just continue to get destroyed. All right. So they did what they needed to do. That caused the correction. Okay. But the question is, how long is that momentum going to last? Right. I'm still bearish on the pound. Okay. And we had said it earlier this week. Hey, right, we got that drawn out. Let's see if we can get a higher push. See if we can get a higher push. Well, we've gotten that higher push. Now, this is giving me the signal that, hey, was this the one? Ooh, shallow retracement. All right, didn't get a 382, but there's a D extension at 173.13. So it's just a matter of whether or not it wants to correct for that. What is this? 173.13. What is that target? 174. So somewhere around in this zone here. Okay. Somewhere around in that zone there. So what you could do is start to, you know, this is happening. Okay. You've worked your way from the top down. Now it's like, you know what? Let me deploy me some counter trend lines to the upside. Okay. Like so. Okay. Then we can run them. There. Oops. Right to the outside of that consolidation. That's an older 4-hour level. Something like that. Okay. So, hey, if it happens, it's going to be a big move. Right? Back to the downside. So I've got time. Right? I've got time to let it tell me that, hey, I'm definitely going to sell off. Like, okay, just continue to watch it. Just continue to watch it. Any questions on the pound Aussie? Okay. So the thought process has to be, hey, I know I've gotten an impulsive move. If you didn't know anything about fibs, you didn't have a fib on here. If you just looked at raw price action, that's a pretty impulsive move. At some point, price is going to want to correct. Am I saying that right? Is that this is crazy?
Yep. That's yeah, bro. Add 1,000 pips to the downside, and then 14 back to the up, or 12 back to the up. Yeah.
This is insane. Yeah. I'm watching Bloomberg today. They just throwing their hands up. So I'm like, this is crazy what's going on in the market. But hey, we're on it. All right. So that's your pound Aussie. Okay. Pound CAD moving up. Okay. Moving up. Look at that. That one got me. And that one, I got stopped out. Thought I was ready to make his move there, right? But I took it early and it moved up. So I knew there was potential for that, but I took a shot on it anyway. But yeah, now it's moving deep into the zone, right? So if it is time for it to turn over, I can put my stop in my regular area up above the A. Now I'm getting that high price. But 152.53, this is a monthly level. Okay. So again, major mover, 1,100 pips. Right? Somebody tell me, if you ever wanted a trade signal, what's the best trade signal on the planet? Somebody tell me in the chat.
My own.
Your own eyes.
Huh?
Your own eyes.
Your own eyes and this AB boundary, right? Your own eyes right? Because it's operating in real time, and there's an AV boundary when it sets up. That's it, right? So look, AV boundary, we got the swing. So if you come down here to your 15, right? We reach that exhaustion point, we start looking for breaks. We start looking for breaks. Setting up universally across the board. This is going to be quite interesting. Okay. Don't get over leveraged on one currency though. All right. You don't have to trade them all. Okay. Don't get over leveraged. Don't overcommit to one currency. These are big moves. All right. 379. It's insane. But it's pushing it up, right? It's pushing price up. Okay. It's pushing price up. That's the pound CAD, pound Swissy. Same scenarios, right? Look at what it did. Moving into some high prices on that Fed. It's amazing. Right. Look at that. I don't know what's going on. Is that right? That can't be right.
You talking about that fit?
Yeah, that's not right.
No, it's not right. But with that impulsive move.
Yeah, it messed it up, didn't it? Because it
Yeah.
came back so fast. This because we didn't get a it should be here. Yeah. Because we didn't get a new swing low after that D extension was hit until right there. That moves too fast for the Fed. So I'm gonna get this out of here. All right. It should be like that. It should be just like that. That the extension was hit, so I can get out of that move now. And there. That's where we are. Okay. All righty. That's the pound Swiss. It's amazing. Look at it. See what happens. See what happens. All right. GJ, man. Ryan, look at this.
Bro. Oh, exploded back to the upside.
Okay. So you get an upside target right back up to the top of that range. Potentially. Stochastics in the buy zone on the GJ. All right, look at that now. Right, I flipped it over. The extension there, 160, 266 resistance level. So right around the same target. 50% pullback, and now it's long. Just like that. Look at that. There's that daily target at 1.18 extension. So we look for D extensions to get hit, correction. Well. Look at your 15. It'll be interesting to see how these play out. Great case study. 1,000 pips to the downside, 1,000 pips to the upside. What's going to happen next? Yeah, any questions? All righty. Pound New Zealand. I think, right, we see it now. The Bank of England didn't like that, right? That slap in the face they got. I mean, you're talking about a comeback. Look at that. I guess they said, we'll show you. Pretty resilient, that pound.
This is my favorite pair all week.
Yeah, just pound New Zealand.
Yeah.
Yeah, I mean, it's paying. That's all I can say. It is paying. So here we are again. I'm just interested because I've never seen it happen when they just rushed in and you got a dovish hike, currency tanks. They run a dovish hike, then they do a tax cut plan, currency tanks. Then they come in and start buying up bonds. Price recovers 1,000 some pips on the pound pairs. And now we're in a position where it's like, okay, well, we can see a correction, but I don't know what the momentum is. Is it ready? Is it now ready to just continue to decline? Now at a slower pace instead of 1,000 pips in one day? Or is this thing going to correct and then just continue to the upside for a little while longer? I'm not sure. So, Ryan, what do you think?
I'm in the same boat, man. I'm uncertain.
Yeah.
So I'm just watching these pounds. Overall, my bias is bearish, but
yeah,
like
I'm
you said,
still
it's
bearish.
a matter of when and how long this push to the upside is going to go, because they also said that they're not going to make any other decisions until November.
Correct.
So maybe
yeah.
these daily levels that we're coming into, they might be key for us to watch.
Yeah.
Yeah, it's I got to see all confirmations to get short on it.
So here's the thing, though, right? No more moves into November. They did try to put these pieces together. They ran a tax cut plan because they know, hey, things are getting crazy. It's starting to tighten up. Things are starting to tighten up. We're feeling the squeeze. Inflation is high. Central banks are starting to get more aggressive globally. The pound is bearish, right? It is what it is.
Mm-hmm.
But we know that the central banks and the governments come in and intervene when there's a rush on their currency, right? We saw Japan do it. And what was Japan's issue? It's not necessarily the level, it's how fast it's getting to the levels.
Yeah.
That's too fast. That's too much of a shock. So when I'm looking at 1,000 pip move to the downside on the currency and then 1,000 pip move back to the upside, that's saying, hey, we got to get back to an equilibrium point. Now we can just continue on with the bias, right? Yes, we're moving down, but we didn't want to move down that fast.
Yeah.
Right. So we can come back down to this low, but we don't want to come back down to this low like this. We're cool with it, free market. We just want to see it come back down to this low like this. Right? Because this is too much of a shock. Right? So they had to shock it back in the other direction. That's what I'm starting to think, looking at some of these currencies, because we know the euro's bearish too. Right? But the way it sold off,
but at least Christine Lagarde has kind of sort of changed her tone a little bit.
Mm-hmm. Mm-hmm.
You know what I mean?
Yeah.
Because like the Bank of England, they've been raising rates since last December.
Correct.
Right?
Correct.
But they're still kind of sluggish when it comes to really pressing to move forward, if you will.
Yeah.
I don't know. Because at least Christine Lagarde has changed. Her tone has changed a little bit, at least. Whereas I haven't necessarily heard that or seen that from the Bank of England outside of this intervention piece, but it hasn't been a tone change.
Yeah.
It's been similar to like the Bank of Japan.
Yeah. I'm with you on that. And what I'm thinking is, right, we've got, this may find support, these bonds.
Yeah.
Right? These bonds. We know usually the bond yields first, followed by the dollar. This concerns me because typically the way the stock market goes, that's the way the pound goes. See what I mean?
Correct.
So what I'm thinking on this is, okay, we've gotten price back to a respectable level after the shock. We've resuscitated the pound a bit. Now it might be time for that continuation, right, to the downside, but a lot slower and a lot more gradual. So that's what I'm thinking, especially when I'm seeing like even on those years when I'm looking at so I guess what I could do, because this is, hey, 80-20 is an 80-20. So set targets, whether it be on the 1 hour, 15-minute, whatever, right? But the same overall premise. Setting targets, okay. Bang, bang, okay. Whether in the 1 hour, 15-minute, okay. If I play it back down to these targets, okay, it might be a situation where I start to reduce the positions, right, coming into these targets. And then if my A gets taken out, that's telling me that price might be ready to continue to run to the downside. You follow me on that?
Yeah, that's a thought. Because on the four sitting at a 786 level.
Right.
Yeah, I mean, I like that thought.
You know what I
And
mean?
then if the A gets taken out, then we can just scale into the downside as the waves form.
Right, because if it's meant to turn over and revisit the lows after the shock, that's 1,000 pips. So I've got time to get back in on that.
Right.
Right. Now, think about it. If it carries, same scenario. If it carries and it starts taking out levels, taking out A's to the upside, then it's the same thing. Then okay, now I revisit whether or not it wants to continue long to the next resistance level. So I think that's how I'm going to play these. You know, because they're setting up across the board almost identical.
Almost identical. Yeah. Yeah. I like that approach.
All right. So let's here's your pound dollar, right? And I was like, okay, like how much, call me pessimistic. It's like, how much of a run is this pound really gonna make on it? Unless the bottom just starts to fall out of the dollar and then we lose all control of bond yields. Like, you know what I mean? Like I don't,
Right.
and the dollar is just, people keep piling cash into the US dollar. I don't, but this is coming into what is that? Is that a 4 hour? Where did I get that from? This is a 4 hour. I don't think that's right. But we're starting to make the ride up into the zone. The one we broke. So it's kind of like this, it's kind of like the same thing. You come to the 15. I mean, you can pretty much lay all these pound charts right over each other.
Yeah. Because that four is sitting just shy of a 618 retracement. Yeah.
Decisions.
I like that thought though, man. Scaling into it. I like that thought.
All right.
We could.
Anybody else out there in this trade room? I'm sorry, Ryan. Go ahead.
No, you're good. No, I was just saying, just a quick look. Could we see one more push to the downside, or on that one more push to the upside, and then a flip? But we're sitting at that level, so we may not. Because on the DXY, it's also sitting at that weekly resistance that it broke through, now showing a support, and right at that all-time high. Yeah. Yeah. we might be in for it to start to turn. I like that thought.
Yeah. This is where's my handy dandy drawing tool here? That's a teacup. Okay.
Yeah, Joy.
Traditionally called a cup and handle. That's been around since the beginning of trading. But if I ain't ever seen one, but that's on the dollar. So yeah.
I like that thought, man. I do. Anybody else?
Yeah.
What other thoughts you guys got?
On the dollar?
On these pound pairs.
On the pound pairs.
What are we thinking?
I'm thinking at least on GU, if the dollar turns up, moves up, we're definitely gonna get those sells, you know. But GN I like a lot. For GA is really good.
Yeah. Two commodity
You're
currencies,
looking at
right?
reversals on those?
Yeah.
But do you think
I think
those
it's
are two
gonna push up a little bit more because on GN, I think I show my 4-hour. One of them is completing. Let's see.
Yeah. I wonder what these commodities, right? Because it's yes, the pound, but against these commodities, right? If we continue to get that squeeze globally, commodities usually take a hit, right? Risk off. So you may see maybe you see the correction then on these pound crosses with the commodities. Maybe you see a continuation long, right? Potentially.
Yeah.
Potentially.
Coming into some really good resistance though, weekly and daily. So.
Yeah, I know. Well, hey, we'll see. But I know. What'd you say? What'd you say?
You gotta stay up tonight.
Yeah, we'll see. It's a great discussion, great dialogue. It's just when I see things lining up like this after a crazy week, when you see 1,000 pip moves in one direction, 1,000 pips back, and everything, like it's just like, okay, what's next? So that is it. That is all I have for this evening. This is awesome, right? To be able to get together and talk like this about currency pairs and situations fundamentally. So I hope everybody's had the opportunity to learn a little something during this crazy week of trading. A lot of shocks to the market. But hey, at the end of the day, the one thing that we can hold on to is that this market moves in waves. That's it. Ryan, anything to add before we wrap this session up?
Man, great session. You guys, Ben and I talk about, he and I talk multiple times a day. That exchange that you just heard is how many of our conversations go. You know what I mean? Just bouncing ideas and thoughts back and forth to open up to other potential opportunities to see what could potentially be there, right? And see if we can see things a little bit differently, and we're able to help mold and shift and grow each other. So, yeah, you guys got an inside seat on it. So, but no, great session, bro. Keep digging in, everybody. Keep digging in, man. Yeah, that's it, man.
Absolutely. So, well said, Ryan. Appreciate you, brother. But we got something that popped in the chat. Mary said, this has been my best week in a long time. So as we close out, everybody do me a huge favor. Drop Mary some 7s in the chat.
Mary, that's awesome. Congratulations. Congratulations.
All right, good deal. All right, everybody. That's it for this evening. Enjoy your Friday, and we'll get right back at this thing. Take care. Have a good night.
Good night. Thank you.